All right. Let's see how this is working. It's been a minute, so I'm going to go ahead and just test it out. If you can, let me know how the sound is going, because it's been quite a while, if I'll be honest. Can we see? Can we hear? Yeah, it's been a sec. Sound is good. Thank you. Thank you. Thank you. You Polish potato, you. All right. Yeah. Let me see if I can do a transition here. Let me know if you can see this. That's my screen. How about that? Can we see this? Oh yeah. Could you guys see that, by the way? Just curious. Yeah, perfect. Oh, it's awesome. Mm, phantasmagorical. All right. Yeah. So, I mean, the big thing here was just not only a test, but also do some analysis stuff. Yeah, we're coming into the big bounce zone. This is something that, I just came from the other community, go to the market update there. And this is the big bounce zone. But, and this is why I love Kayotaka, by the way, if you don't have it, there's a link below. It's free. It's amazing. Huge order book stepping it above us 68.8, like 125 mil and look at that 125 mil and 89 mils. Somebody's stepping in with 200 mil to try and keep this sucker from bouncing where it's supposed to. This just coming in on the order book because Kayotaka just released this new order book profile, and that's the biggest static order we've seen in a bit. And there we go, flashes back out. Uh, I love it. I love it when they're manipulating the book like that. It's incredible. But the big thing here, really, that stands out is seeing that we're going to have this is the bounce zone, and there's a couple reasons for it and why it's so critical. But the number one big thing is we want to see this thing play out, right? We want to see the holds of it. We want to see this golden zone to basically be the level that we actually are able to hold. And it's pretty simple, in all honesty. The daily open here is just critical. What we saw from Wednesday was amazing. The close was the highest daily close we saw since going back to the start of February, like the 5th. We're still very hard off the low, likely hard reverse zone at the February level. And that's where we would expect price if we do actually hold these lows. We do hold 65.7, where we do actually see a major resistance area. And this is for a couple reasons. It's not just that; it's also the fact that we've got much higher time frame, older, untested downside levels. This is like the March-April structure from last year that we've already broken below. And I think there's a pretty good argument that we could still hold it and come into these areas, but it all really depends on two things, which is, are we going to be able to hold 75,750, which is the weekly open, which is the key to holding this entire structure down. That's just it. Because if we lose on a daily, look at the structure. This low was fully tested. This low, fully tested. I don't even think 64K is that big of a deal anymore, if I'm to be honest. I don't. I mean, you could arguably say the swing of it, of the daily, but I'm just going to take it off for now and just focus on what do we have, right? We've had a huge test of this daily support. It's still very strong, right? But if we start grinding underneath this and losing the weekly open, there just isn't a whole lot of reason to actually hold on to it. If I'm going to be dead serious, it's just not, unfortunately. But for now, right? if you got the shorts from the highs, from the high structure at like 72.9, great. This is a golden opportunity to take some profits on shorts. This is the area to bounce from. Previous dailies, the weekly open, all that jazz. It's all in one spot. So I guess the idea here too is to look at a couple different things, not just Bitcoin, but some big movers on the alt side. UAI was a big one just because this thing has done an amazing step off on the open. I don't know if there was a new some news step to, coming in off of it, but it was a huge gain. Fundamentally, it's changing. We've created a major low. If we go on the daily time frame as well, it's got amazing support down at 16, 17 cents. It's done a 50% up move from the lows from the start of the month. And yeah, that retracement is looking like it's now testing the previous high. Like that's all it's doing. We're seeing a test of the previous high that we saw back on the 26th of February. Nothing's fundamentally changed with this in the sense that we've done a big back test. We haven't failed anything. It tested overlapping bullish structure. It looks strong. There's nothing here that says we have to go lower by any means. Now, that being said, a lot of these are starting to look a little toppy, right? Watch this 4 hour. If we do start breaking some of that high frequency, starting to break back below, say, 30 cents, I think that's the cutoff. Let me just look lower. Yeah, it's about 30 cents. If you start losing 30 cents on this one, you should see this big, nice, juicy fair value gap we have here. This should start to get filled back towards the previous weekly open. So if you do see this failure, we should see that move pretty quickly to retest. A lot of it really depends on Bitcoin right now. That's the number one thing, which is Bitcoin going to actually hold levels or not? At the moment, it's showing quite a bit of weakness, but it's in the bounce zone. So, and actually, in all fairness, it is bouncing where it's supposed to bounce. That's what I love to see. And we're getting a reversal pocket and everything. Kind of like it. Kind of like it. So, as such, seeing that relief, love to see it. Has anybody got any tickers in there to pop it, throw them at me? By all means, I'd love to see them. So if you got any tickers in the chat, let me know. I'm going to go through a couple. Let's look at BNB. I haven't looked at that in a minute. BNB has got a nice big failure to come back in off the highs. So this looks attractive in the sense that we've had some pretty nice breakdowns, big bearish retests. It's broken, my trend line. If you, whatever you want to hire, I don't know. I don't use trend lines. You guys know me. That's the way I usually trade, is just failure, continuation. But it's coming into support. A lot of these things are at levels you should see bullish backtests off of. And if we're going to go look at some key zones, this one sticks out because you want to see this thing clear back above that end of day. So that would be my ideal move, is to see a crawl back above 633 on Binance, on BNB, to see that relief bounce back up towards the Q3. And that's number one, is really simple. It's basic price action. If we had a big, massive bullish engulfing where we could establish demand of a previous range highs, the expectation is that we break into higher moves. And in all honesty, from the low that we closed at, lots of overlapping support. Very unlikely if you come down here that you break that one move. Very, very likely that if you do the macro move, you'll probably get right into this pocket, just sub 600, and you should see a big bounce. It actually should hold above that, but it definitely stands out as a major one, a major support zone for BNB, because BNB got absolutely throttled, like properly. But there are all some nice outliers in the sense that we had the close yesterday, or not yesterday, excuse me, Wednesday. The Wednesday closing above those older monthly levels, above the Q3. It's just showing that it has some strength to actually hold some of this key mid-zone test stuff, which would be good to see. Because if we hold the low, now that we made a higher high off a pretty significant previous high and the previous ones, it just means any regain of 660 basically should start a major relief bounce across the board. So that's one to look at. If you see any regain back above 660, that's almost, you can almost blindly break out trade it to see back new highs above you. That's looking nice though. Render. Yeah, I haven't looked at Render in a minute. I just wish they wouldn't have changed their name. Render RNDR just works. That is Chop City. Oh boy. Very clear failures of the range high at 1.55 at February open. Looking at the daily here, we're holding the weekly open, but it's tentative. It's quite weak. We've had a good close. It's still at the level to hold. I mean, all this stuff is basically saying you need to hold this zone aggressively. I would say closing below somewhere in this zone. I'd say that needs to hold aggressively on the weekly. Watch that. If we do start failing that on the daily weekly, you should see some more grinding back down towards the yearly open. The problem that Render has for the most part is that it has no lows on the high time frames and above to test. That's the problem. It's completely flatlined and it's losing levels here, and it's just showing weakness. The ideal move actually is regain the previous weekly at like 14.15, which is also gaining above March at 1.4. That level regain would be a significant change in the price action. Yes, you still have resistance above you. It's quite minimal. You've had 3 major tests into it since it was created. What do we know about support and resistance? The more it's tested, the less likely it is to hold. So if you hold these lows, great. The gain here should actually see the squeeze that gets you back up towards Feb, invalidating the quite small resistance zone. But you got a lot of stuff going for you. You've got bigger levels down here at the yearly. I think if it just free falls underneath the weekly, you still get a test off the yearly open that actually potentially holds. I think that's the number one thing. Absolutely. Come on, give me some more. I will take some more, please. But this is mostly a test too. I appreciate everyone, all friends from the community, jumping on just to watch the stream a bit, just so I can kind of test it and see how I can improve some stuff. Maybe do a couple more analytical pieces. I think some of the things as well. If I look over at, let's see, if I go back towards Kayotaka here. So this is one of my favorites to look at on the Kayotaka side, just because it's basically the whole market CVD, the cumulative volume delta for Bitcoin, which gives a nice big picture of like what's actually happening and why things are moving the way they're moving. We saw the move starting really aggressively, starting back on Tuesday, back on, even Monday on the perpetual side, but you always defer to the spot. If the spot volume is actually increasing, it's way more likely you're going to see something aggressive coming out of the move. And reality is everything was up only until right about the first major failure when we started breaking back towards 72. Got the big retest, but it was fake, right? Look at this. Look at when we got the big retest of the highs here. The spot was already down. Binance was already full bore selling on the spot side. But if you're gonna look at anything, watch the volume deltas for Binance. They're still driving the market by and large, and it's all still outflowing. It's starting to stagnate on the current candle. We're starting to get a little bit of an uptick, but there's no major dominant change. It's still dominant out and down, and that's why we look at it. Really is. I wonder if these guys got filled. Actually, bear with me a sec. I'm going to go quite low time frame here to see. Or did they flip it? They flipped it. Oh boy. So give this a sec. It's got to load up a little bit. Let me try reloading it. It's quite a big chart. There we go. Yeah. Wow. So those big, huge 120 mils, those big guys are now stepping in to hold the lows. And as I said when I started it, that's the level to bounce from. And we're getting a pretty nice little relief. The first major thing in the order book stepping in right now. We're seeing a couple things pop in the order book to push it. So you could probably scalp this back if there's some localized failure. I really like this new edition with the order book profile coming in on Kayotaka. It's so easy to follow. It's very simple. Like, you know, it even flashed. There we go. We got 140 mil stacking right above us at 69K. And what do we see again? It's fake. They're just flashing in to drive pressure in the book. That's all it is right now. So absolutely glorious. Let me switch back real quick. There we are. What about Morpho? Yeah, I've seen Morpho. I know Morpho's come up quite a bit. Let me see. What is the... All right, so high time frame. I need to redo these levels. They're very old at this point. So let's just delete. Actually, let's just delete all of them and go from a fresh chart. It's always the simplest thing to do. Is default. So where are we actually doing? Let's go high time frame to low time frame. So weekly open, what have we done? You know, obviously major failures off of that back in last year, not super important or relevant. All of these highs are tested except for this one, which we're testing now and rejecting off of. So that was the last weekly high that was been tested. We've done the basic $2 test effectively, which is, I guess, a psychological level. Going down in time frame, daily overlapping, massive overlapping resistance on the daily time frame. Like if this $2 was your sign, that's huge. All the levels are above you. It's coming back down to retest. You need to see holds at these older levels at the weekly open. Effectively, that if you lose 1.74, you're starting to break the trend. It's starting to slow down. I can just tell by the way it's moving. You're getting a lot of divergence here. So strength, which is the thinner line of these two, it's already breaking down on strength. Trend just now starting to break. So watch it. If we do start failing that, you should see a collapse back to the previous weekly at 160. So let's go lower in time frame now that we kind of established that. Yep. Nice big failures. Nice big retest the highs. Failure to achieve previous high. Sneaky close below yesterday's open. Bearish retest. I mean, this is some of the cleanest price action, high time frame to low time frame I've seen. Very clean, coming back into a major support zone. If we want to see something that actually holds, you're going to look for that magical level down here to hold structure, which it can technically still hold, I would argue. So that's kind of your sign. So all that's being said, that's the kind of target range if we have continuation. If you want stagnation here, you don't want full failures. You honestly don't want to lose 1.74 because that's the weekly as well. But that's your golden zone to kind of come into. If you hold in this zone, you're likely to get a relief bounce. That's the big one. But it's playing off a nice big bearish divergence. It's got collapsing strength and trends. It's a pretty hard down move off of that high. The problem that I have the most is that the daily's kind of cooked. It's well overdue for a significant retracement, and it's coming back down now here to lower time frame support compared to like the resistance on the daily time frame, which was massive, absolutely massive. They do have a couple things going for you on the low time frames to potentially find some reversal here. You're coming into the monthly, first and foremost. So you want to see holds here locally, and then some rebuild of structure that gets you the relief, starts the relief bounce. There's nothing on any significant time frame above that would likely stop you from coming back towards the daily. I mean, if you're going to be really conservative, probably the swing. Actually, that's way too conservative there. 1.85. It's about the same level. That's the expectation if you get the lower time frame relief bounce to go back to that level. But and a couple things for it. On the on-chain suite here, this is just showing retail stablecoin demand. It's inverted, so it's showing very high retail stablecoin demand. What does that mean? Retail traders are exiting the market into stablecoins. So if the demand for stablecoins is high, that means everyone's hitting the panic button on the retail side. And these are like smaller transactions. You got volatility on the suite breaking down pretty aggressively. When it breaks above, it's usually the start of something pretty big, which it was for a pretty hard down move. right? And now it's kind of bottomed out. When we get into these bottomed out zones, it's usually when you find actual local bottoms that are significant. Another thing, strength is starting to flatline. We're about half an hour into this hourly time frame, and it's already starting to see some relief. And then you can't really see it, but this kind of pink looking bar behind it, this is what we call the high frequency trading, and that's already coming off in the current one. So we're seeing divergence, lower time frame. I'm sure if I go to the 5 or something, it's starting to diverge, right? It's at some low time frame support, which isn't at all massive, but I think even on the 5 minute, like my kind of go-to is using that high frequency stuff. So if I just go on this thing and just turn all this jazz off, it's I know it's a lot to read. I'll just leave cash flow and high frequency on. Sorry, everything else off. Makes it maybe a little bit easier to read there. So the high frequency again was building into this move. It's now divergent as far as like the pain point of the move, coming into these lows really aggressively. And you're starting to see that divergence play out, right? You're seeing it here. You're seeing the cash flow as well. You're seeing this move. You're seeing the volatility starting to tick up. So realistically, what you want to see is low time frame gain that to get a relief bounce like 1.81 back into this zone, right? And that's going to be the low time frame level. That'll give you maybe some headaches if you get back to it. Probably get some rejection. You gain that level, and you're going back up to test 1.83. So it's ripe for a potential retest, regain, that type of stuff. But for right now, I just don't see it because number one, it's just not it's not regaining stuff. I'd want to see that gain right there. That is the gain, 1.795 or whatever it was. 100%. It's that 1.7935. That's the gain back at support. That should see a relief bounce and retest higher. So that's the high time frame to the low time frame on that sucker. Any other ones? Anything else anyone's looking at? I'm more than happy to jump through a couple, but that is an interesting one to say the least. Let's see. TradFi still looking abysmal on the day. It just needs to see some type of pull, some type of relief here. That's the number one thing. You need to see some relief on it. If we look at ETH as an example, that's in the zone of test. It's in the bounce zone. It's at the overlapping support. It's the levels we want to see held realistically. Yeah. So ETH is another one. It's right at that level where you want to see some major supports held potentially. It's all there. It's all right there in my mind where you want to see something aggressive, something that really sticks out as a bounce move. The 4 hour right now, we got 20 minutes left on it. It's just looking relatively weak, if I'm going to be honest. Just generally weak. You got some bad closes on the hourly. You can have another move back towards 1950, but if you do, probably likely you're going to get quite a few low time frame divergences. And the fact is that it's overlapping support at 1950. You've got the same thing as Solana, right? You've got the weekly open, you got the previous weekly and the monthly open in one spot. That's the level to hold. It really is. And end of day, you want to close above 1981, which is still extremely likely. The level you can't lose 1938. So we're actually really much closer to a pain move on ETH and Sol than we are on Bitcoin, as this was largely a Bitcoin driven move. Looks good though. Still. Any other tickers anyone's looking at? By all means, fire them away. I'm going to do probably just not a too long and one quite short stream today, just to go through a few things and check it on my end, and then probably start doing more of them if I'm going to be realistic. Because they're good. I mean, they give you a nice perspective, and I like to look at high time frame perspective as well. I mean, that's my number one thing is like I don't trade the intraday stuff. I usually focus on the high time frame stuff. which is, we'll see if this plays out. We'll know probably by Monday if we're going to be doing any of this. Monday to mid next week if we're actually get the big relief bounce or not. I'd like to see it, but for right now, because we've collapsed back below the previous range, it's looking like we're going to play out something more similar to what we just did at the highs here. We broke back below and failed it, and then we just started cliffing it to the next low. The low end targets, by the way, cycle wise, have not changed. The expected bottom is still somewhere in October, plus or minus 30 days, with I think expected lows on the bear market at around about 39K, plus or minus 10%. Either direction. Still general targets here. We'd have to regain priority above 95K for that to fundamentally change and for us to be breaking the 4-year cycle model, because this is held for the last 3 cycles. So basically since 2017, when we did the 2016 to 2017 from the halving, just full run up, swing fail, bouncy ball of doom for a low liquidity altcoin. Floor drops out, sideways consolidation, COVID, full run up, hyperinflation, well, not hype, I guess, massive inflation, full distribution, sideways consolidation in the summer, small distribution, big swing fail, breakdown, shenanigans. The Q1, Q2 of 2022 was hilarious, if you don't remember that. Big shenanigans there. So basically, the way I'm looking at the cycle wise, we're in one of 2 places, and it all goes back to the last cycle, right? We're just coming now off of this structure. Like that's what we just did in the previous, like last month, right? Like the month before that, we went down to 60K. We did this move where we broke above the high, we faked out, and then by the time we failed the low structure here, it was done. It was done. We are either in one of 2 places. We are either here, or we are here, which means we're way closer to the bottom than we think, or the more likely move is still, until we get confirmation of breaking out of the structure, that we're more likely looking like it's in May to early June of 2022. That's still the objectively right fractal that we're looking at. We could be here, but for this to happen, we need to like create support above where we effectively are breaking down from. And I think that's not impossible. The problem that we have the most part is this only plays out if we hold the lows and we actually create support where effectively the last cycle's bull high was at 69K. Like daily support is created here. We have major moves above 80K. And then I think it's not unreasonable that we get into the low 80s, but outside of that, I don't see like a massive change of price action structure or rally yet. There's just no evidence to it. There's just not any evidence. What about SMT? Oh, good question. I haven't looked at SMT in forever. I still have a bag of that, but it's mostly been round tripped all the way back into the lows here. It's the reason somebody told me about this the other day. I haven't looked at it myself just because it's a little bit above my average, but the higher time frame here still screams that we're seeing some changes on the weekly. We just need to see that translated into like structure changes, like closing above this. I think the biggest problem is that it's still a very low liquidity small cap. Serious project, 100% serious project, serious team behind it, backers behind it, like TradFi professional side. Real world use case, absolutely, but it's been basically dead since August, and we kind of knew that with those big failures back of above things. It's had a big test of the highs. It's regained some of the lows. It hasn't quite gone back towards the things it was doing in June. So it's a bit of an outlier because it's not a high cap or a mid cap. It's already gone below its October 10th kind of scam failure that scared the entire market out of existence. What you want to see here is just a close back above things. Something that closes back above. You've seen a pretty nice relief bounce all the way up to 0.862 or roundabouts 0.852. It's closing back above that previous high. You want to see that effectively nullified. The level also, because of this, and I think Mexi still is the highest liquidity for this token, I believe. it still has some opportunity to hold things, right? Still making higher highs and higher lows in the most recent daily price action structure. So ideally, you still see holds back in this zone, right? That's the zone to hold if we're going to be all serious about it. And that's where we're seeing the bounce from. If it loses the weekly, you should see a collapse back to find support, some demand, maybe even at 5 cents. That's the way I'd look at it. So, like everything right now, it's at support until proven otherwise, at least locally. That's nice. But like I said, I'm going to keep it pretty short today. I know, I can do a much longer session. This is mostly just a test for myself to see what works and what doesn't work on the streaming side. I got to make it pimp too. I got to, make sure the stream rate's faster. I think the chats, I need to make the streaming, like the latency of it way quicker so people can respond faster. There's less of a delay and that type of stuff. And I think that'll be better. Maybe even using like a multi-stream service. So it's just rounding up back towards Bitcoin to kind of look and see what we're doing. Yeah, like I said, we're at the big support. The big 4-hour close here is in 12 minutes. It needs to see a significant climb back before this 4-hour closes. Otherwise, it's starting to look like it might just want to continue and break some levels. But if you have any shorts on most things into these zones, almost everything's in the same spot since the big upside move on Wednesday. Thursday, Friday have been outgoing and outflows only. And that's the expectation still currently going into the weekend. So this is a great spot to take a little bit of profit off the top in case we actually do hold this level. But the key stuff really is the higher time frame because it is the weekend. It is the daily level to hold, right? This has not fundamentally changed at all. This needs to hold. If we don't hold this, it just invalidates this entire move. The entire structure becomes a potential bearish retest failure. Coming back to 70K, you likely reject that. You likely reject 69. A lot of these key levels as well. Yeah, no problem. Hey, thanks, Adrian. Appreciate it as always. So from there, I'm basically just going to sign off, and I'm going to start trying to make these things a little bit more regular to kind of lead into things. So yeah, yeah, it's been fun. So the big things here really is watch the closes as always. The order book's starting to thin out a little bit where we are in like the local structure, which is nice to see. It's calming down a bit. We're seeing the weekend plunge protection step in at 65K and at 75K. It's pretty stacked on both sides there, but we're right here in the middle of it. We're holding the levels that we want to see held. If we do, great. If we don't, target lower. Local priority remains to the downside. Seems to be underside retesting here. So in the next 10 minutes, you'll know very simply if you can actually close your way back out of it. And ideally, you close back above 69.2. That would be the first step of like doing that by end of the hour, that you should see a pretty confident move higher to relief. If you don't close back above this by the end of the hourly, you could easily just see a continuation loss back to the previous weekly. But coming back into this zone, you're still expecting a bounce because we haven't had any relief at all. The macro is still, in relief until we start losing bigger levels below us. And the nice thing is we're starting to see some bottoming structure form. High frequency is starting to come off of the lower time frames. Retail stablecoin demand is starting to get into extreme levels of demand for retail traders going into stablecoin. So if there's going to be a relief, we're probably closer to it than we think. Watch the weekend stuff. Number one thing to watch is Bitcoin and the Bitcoin dominance. There is a potential alt relief play. I know this move up on Wednesday was mostly Bitcoin. If Bitcoin starts to stagnate into the weekend, very likely you're going to be seeing some type of dominance drop. And if there's a dominance drop with basically if BTC.D is going up, but the price of Bitcoin is going down, alts are getting nuked on. Conversely, what you'd want to see for the weekend is Bitcoin price basically stagnating and Bitcoin dominance, right? BTC.D dropping off a cliff. If that happens, alts relief. So, But yeah, mostly a test. I'll probably do another one. I'm definitely going to do another one next week. I'll probably put it in like a rotating schedule and see and start building back in. I'm going to test a couple things, make sure everything's firing right and correctly, and we'll go from there. So appreciate everybody. Thank you so much. I will be back around next week for another session. So I'm going to try to do more of these. Till then, peace out.